Good evening. I would like to call this committee, Finance Committee, to order at 6:31.
I didn't like that. We'll turn it over to insurance team out. I didn't like that.
Given with roll call. Hayward. Adams. Jackson. So, Ms. Brown, what do you have for us?
I have some reports from the system.
You get more? You just made one for the committee.
Yes, who needs one?
Here in 2 seconds. Nathan, Candace.
Is it?
No. I guess not.
This is our, good evening to everyone. This is our second Finance Committee meeting since my tenure here. And we have not established per se a format. So I would just like to basically this evening to discuss the fund balance, the revenue statement, and the expense statement. I think that is pretty much what will be of interest to everyone. And then whatever else on the horizon that we may know of in terms of adjustments or things coming down the pipe. So I did not receive any formal agenda or questions, so I'll just start with that. The first sheet you have is the statement of cash position. Let me start by asking, are these reports that you're accustomed to seeing prior to mine? I'm not really sure what was handed to you. Okay. So these are the three reports that you're accustomed to receiving. Okay, thank you. The first sheet is a summary. It's basically starts with our position as of this point. So the beginning balance would be the January balances, which we've all seen from the December of 2013 discussions we've had. The next column is the year-to-date revenue, which would be from January through the date of this statement. The next column, the expenses, the same. The unexpended balance is basically the beginning balance plus the revenue minus the expenses, give you the unexpended balance. And then the outstanding encumbrances are basically purchase orders that's been issued. And the last column is the ending balance after we account for all the things that was aforementioned. Couple of adjustments and things I'd like to say about this statement. This statement runs as of the moment in time. So if you look at the date at the top, the June 2nd date, this statement runs as of that date, even though we closed as of April, which is the date as of. This statement actually runs all transactions. There's really nothing that we can do about it. That's the way the system is set up. So, having said that, I would like to talk about the revenue and adjustments that we have to make. So, for example, the revenue as of this statement was $6,000,008 plus. There's a couple of revenue items that's not included in this number that should have been included, which is another $250,000 plus. So the revenue should be adjusted to $7,161,879. Okay, the expenses, so the revenue is not like the expenses. The expenses, as we write checks, it keeps rolling. So these expenses includes any expenditures that were written as of this date, June 2nd. The revenue is through April 30th, so the two are not commensurate, and that's why I had to make the adjustments to bring them in line. So therefore, the unexpended balance is $395,981. Looking at the encumbrances, we have an adjustment to make there. One of the things that when I was reconciling, there's a lot of 2012 and 2013 encumbrances that should have been written off or closed out, and they were not. So if I adjust for that, that's another $1 million that should come off the 2.7. So the net encumbrances are 1,584,271. Thus, that adjusts the ending balance to a negative 1,188,289 instead of the 2.6. It should be 1.1 plus. Okay, I'll pause there. Let everybody catch their breath.
Could you tell us where that 250,000?
Yes, the 250,000, they're like deposits that were not recorded, that does not commensurate with the expenses. Totally, there's like 1,000,002. But in terms of the revenue expenses, the May expenses for payroll, we had 3 pays in May. They're not included in these expenses, so I subtracted out the comparable revenue. So instead of listing the 1,000,002 as revenue, I just adjusted for the 238, and the other 25,000 came through the mayor's court for the 257,000 adjustment. So what I'm trying to do is to align the expenses and the period that they occurred with the revenue. And as I said, the revenue doesn't automatically post, the expenses do. But the payroll for May, we had 3 payrolls, it did not post. So all of the May expenses to vendors, is what we call accounts payable expenses, are included in the 7,000,007 through the end of May. Okay? So therefore, it adjusts the expenses and the ending balance. And then also, like I say, with the outstanding encumbrances, when I ran a report, there was like 1,000,000 plus outstanding from 2012 and 2013, which should have been closed out. When we pay out the POs, it really should be closed out. I don't know why they weren't, but they will be closed out, so they won't show when we close out for May. Okay, the next report.
Sorry.
That's okay.
Mr. Chair. So those ones that didn't close out, are they at zero balance?
They're not necessarily zero balance. A lot of times there are blanket POs written, say for example, one of the supply stores, and they may have $1,000 blanket. They may only use $600. So the other 400 needs to be closed out once it's determined, because blankets are not carried over from year to year. You have to close them out and then open new ones. And we have opened new. There's a lot of blanket POs also in the outstanding encumbrances, which sort of, I would say, inflate that number, because the blanket takes it maybe through the year, like with waste management and some of the others, supplies.
So those blanket POs, again, that you had left over, then you adjusted then that amount that wasn't spent, that was included in the budget?
Okay, it closes out. In the budget, from prior year encumbrances, they're brought forward. So once they're closed out, it takes them back out. I mean,
I understand that. So, yeah, I just want to make sure that that's what you're saying happened, and that's what happened.
right, so I have a whole list.
With those
When I
numbers.
ran a report, there's a whole slew of them from 2012 and 2013. So those are the ones that we're gonna close out. Because if the bill has not been paid, I'm sure we would have been notified by the vendor. And if that's the case, I'll just issue another PO. But like I said early on, one of the delay in presenting these statements, I was trying to, thank you very much. This is from sleeping under the air conditioner. One of the delays, we were trying to let all of the 2012s and prior years run through the system and run its course. And so that's why I was saying that probably like March, February, March, the hope was that it happened. So now at this point, there would have been some demand or claim that we're still over somewhere from 2012. I'm sure they would have contacted us by now to say you owe us, whatever. So as far as I'm concerned, to the best of my knowledge, we're into 2014. We basically paid all of the bills and things that were left from the prior years.
Mr. Chair,
Yes,
can I ask a question?
go ahead.
Ms. Crowe, can you, just to humor me, because I don't get this one at all. fund number 252, and I'm not picking at ambulance billing, but from what I see, we had sort of like a little plus in the beginning balance, then we had a year-to-date revenue. I see the expenses, but then the ending balance is a negative. How did we get that large of a negative?
Well, again, some of those, like the 205 for the encumbrances,
Right?
and what I will produce next time is a list of the blanket that may take us all through the year.
I see.
But the
So that's part of
revenue
it.
is only to that point.
Mhm.
We do not accrue revenue. So like, for example, I cannot in this statement add revenue that I may be receiving in December. Okay, but in the encumbrances and the advantage of doing that is sort of set aside monies, basically your fixed cost or whatever, so that when you're trying to decide adjustments and what have you, or enhancements to the budget, it helps to know that you need this amount for this and that and the other. So this is how I use the encumbrances as a set aside, so that we will have money come December for that contract or whatever, versus doing it month by month, and then December come, you may say, oh, we don't have any more money left for that particular contract, you know. So that's how it's to be used. And like I say, as, you know, we, as the days go on, we're evolving, and like I say, in terms of cleaning up a lot of this still and adjusting it so that it will be congruent with the periods as of the statement dates.
Ms. Crowe, I do have a question. How are we to date with, for example, waste management, the utilities regarding the street lighting,
Okay.
some of our other outstanding accounts?
With waste management, they're really okay. We owe waste management $794,580. And the way that I computed that is that, and I'm computing that based on what's not in these statements. So in terms of these statements, we don't have 7 months of the anticipated savings. We anticipate the savings to be $14,000 with the recycling savings. We anticipate that to be $14,000, which should result in a $98,000 surplus by the end of the year. And then we owe them $682,000 from our regular monthly, and we owe them $297,000 from the special arrangement we had for the last year. So the waste management, you know, is close to $1 million short. We owe them for the whole year.
What about the street lighting?
The street lighting, I don't have any information, specific information on the street lighting other than what's posted here. Let me see, where's the street lighting? Sorry. The 212. And the street lighting comes through the property taxes. The property taxes are not pro rata, like 1/12 every month. We get them periodically. So we still, so therefore, I mean, the street lighting bill is paid usually a couple times a year, what have you, or, you know, like big amounts. Whereas the revenue, it comes in through the property taxes. So what you see is basically the property taxes that we have received to date. And of course, we have much more to receive for the end of the year. So therefore, that's why that appeared to be a deficit at this point, but I will review that and let you know, forecast it out for the year, and make whatever adjustment we need to make.
What other outstanding vendors do we owe?
Oh, we have, I mean, we owe, I didn't bring a list of the vendors, but I mean, all of our operating vendors, we owe everybody something, because like I say, we pay net 30. So, I mean, there's vendors that's outstanding, which is represented a lot by the encumbrances, because we issue purchase orders for vendors. But like I say, be mindful that some of these encumbrances represent a year, And for example, you look at waste management, you see that big number there. I mean, that's half almost of what you see as encumbrances, but it's for the whole year. It's not for 1 month. But you know, I could give you that number. But it would not exceed encumbrances. The invoices won't exceed encumbrances, okay? Because we do appeal, then we do the invoices. So the liability is not greater than what we have for encumbrances.
Yeah.
Will you be able to let us see the age payable report?
We do have that. I mean, I don't have it with me, but we do have a report where if you want to see all of the invoices outstanding.
Can you email it to us?
No, I can't email it. These systems, I mean, it would be difficult to email. I have to print it, then I'll scan it. And it's a very long, I mean, I could, but it's a very thick report, okay?
Because then we'll see, you know, what's outstanding, 30, 60, and 90 days.
Yes, Mr. Adams?
Could I read?
Yes, sir.
Police levy and fire levy. 110 and 174 minus. Is that due to the property tax deduction, or the levy didn't support it? How's come we got a deficit in both of them? 64,000.
Yeah, we started with a deficit. If you look, actually, we're doing better. We started with a $201,000 deficit in one, a $234,000 in the other. If you look at the last column, they're down almost, one is to 110. I mean, it's down because of the way we're budgeted expending. And so by the end of the year, we hope to see a big improvement in that. But if you recall, those were two that sort of helped us to go in the fiscal watch because they came into the year with deficits, which is what's in the first column. And so everything in between is the current year. So we're working on decreasing that by not overcharging expenses there.
And as you was looking at it, the expenses, does it look like you said, we're gonna be in a plus at the end of the year because of minus patrolling, minus overtime, we're gonna be picking up. Is that the reason?
Well, the reason is basically how we allocate to that fund. I mean, for example, maybe there's 6 officers that we allocate to that. I mean, it's not directly related to layoffs or whatever. It just may be that chiefs say there's 4 officers that we should charge there, or 3 or 4. So that's how we manage those funds versus just saying if it's laid off or what have you. And now one of the things that appears to have happened is that maybe there was an over allocation in the prior year. And then, like I say, the property taxes come in, I mean, it's a crap, you know. They give us an amount that we budget, but then as the year goes on, if it doesn't come in, you know. So that's why we try to budget no more than what they say, and, you know, then we have to watch it to see.
Yes.
You figure 20% delinquent?
You know, it's not directly related to that. No, I didn't get into calculating related to these particular. I mean, when we look at property taxes, we're looking at them for the total city in terms of what is down.
Is the property taxes related to the levies? That's what I was trying to get at.
No, it's your collection, you know, when you pay your property bill every 6 months or whatever. And so it's, you know, it's based on the millage and all of that, but there's no levy, to my knowledge, that's on the books for that. It's just that, you know, what they collect, just like with the income tax. You know, what's collected, I mean, that's what's passed on. You know, I mean, like with the city income tax reader, whatever they collect. So, I mean, we don't put a levy out for it, it's just whatever people pay when they file their income taxes. So the property, when people pay their bills, if they pay, of course, if they're delinquent in their property taxes, then it will affect it, but you don't really have a way of knowing that until they do what they call a settlement, which they do twice a year after the July collection and the January collection. Then they do what they call a settlement to say, this is what you received, you know, so this is your share. You know what I mean? Because some goes to the schools and it's spread about. So you can't just say that it's gonna go down 20%. I mean, I can't. Maybe somebody knows who's delinquent before the close of the tax period. I don't know. You know, I mean, I can't sit here now and say who's gonna pay their taxes in July. And so, but like I say, you know, we're watching it and we'll incorporate that when we, the revised budget that I'm working on for 2014, which hopefully we'll have in a few days or so. You know, we'll incorporate and make whatever adjustment to get some sense of the trend. And having said all that, I mean, for example, like with Rita, this month, our Rita income was down $223,000, just this 1 month. And again, it's based on collections, okay? So we were down $223,000 from where we were last year this time. And again, I guess until April and everybody filed, you don't know who's going to file until they file. And then, you know, and that's why this month is the low month, because this is basically the time when they go back and reconcile, you know, the April filings. And so June 1st, when we received it, and then I called them, it was like $200,000 less. And the other thing too could happen, if some of the companies or businesses say prepay, I mean, you know, like if people overestimate their taxes and then they file and ask for a refund, that too will impact the numbers. So as I say, there's so many variables, you really just can't sit here to say what it's gonna be. 1 year may be more, if someone owes more taxes than they estimated, so there's more collection. And if they overpay, then there's less collection, because they ask for a refund. And the same with the businesses, they do the same thing. So those were, you know, a couple of things that really impacted the revenue for this year. But that was a big hit, because I called them right away when I saw the June's payment, like, where's the rest of the money? And so we went through that scenario and reconciliation, so. Okay.
Mr. Chair,
Yes.
I read from July's property tax, when does that payment come to the city? How long does that take?
It doesn't come as a payment. What they do, there's an ordinance that's passed where the city requests and this body approves that we receive 5 advances during the year. I mean, they're like, the next advance will be in July, then there will be one, I think, in September sometime. The last one may have been in May. So the advances, and then they reconcile the settlement. The settlement for July usually comes in September. And that's when they go back to see what the advances they have given us and whether or not they need to make an adjustment to what they gave us, which means deducting some money or adding. And it's just, so after the July, the settlement will come usually end of August, in September usually. And we'll see the impact, such as I'm seeing from Rita in the April 15 collection. So like September or October sometime, that's when we will be able to see if they have over projected in terms of those advances they gave us, or whether it gets more.
Richard, one more, maybe more to the mayor. When the waste management came in with their contract, we did have some discussion that we were going to readjust the number of houses based on what their figure was of 9,500. Is that something for us to do, or is that something for us to do with waste management, or give them a figure? Because, you know, there's been some homes that are demolished, and there's some, I would probably argue we have at least 350 houses. You know?
Mr. Chairman, if I may.
Yes, go ahead.
The last conversation we had with them was just a couple of weeks ago, and they stood by their number. They said that they've gone out and it's accurate. So I don't know, this keeps coming up, and I don't know where this great discrepancy is that it keeps being brought up, because they counted the houses, they gave us their number. Unless someone else has other information, 350 houses less since when? Because last year we only tore down 3 houses. Well, actually, that was this year. Last year, I don't think we tore down any.
Okay.
So does anyone have any hard proof or,
Let me relook.
yeah, because, you know, we really haven't torn down houses in years. I mean, we had a flurry back in '09 and '10, but since then it's been pretty slim pickings. So,